So welcome to the Keystone Central School Board's work session for January 7th of 2021. I'm going to open up with call to order and the salute to the flag. Bo's going to take care of the flag for me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible,
Visible,
with
liberty, and justice for all.
Thank you. Okay. Tracy, can we have the roll call, please?
Mrs. Donahue? Mr. Elling?
I'm here.
Mr. Johnston?
Here,
Mr. Koch? Mr. Koch? No. Ms. Lynch?
Yes. Yes.
Mr. Miller?
I'm here.
Mr. Probert? Mr. Probert? Mrs. Smith?
Here.
Mr. Strauss? Mr. Strauss? I have 5 members present and 4 absent.
Thank you. So we do have a few presentations tonight. The first one is school board member recognition.
That's me. Thank you. Um, In honor of school board commitments to students, schools, and communities, January is once again designated as School Director Recognition Month in our Commonwealth. Pennsylvania Public Schools educate nearly 2 million students, and 3,688 are in our district. The 9 members of each local school board are a key part of the district's success, making informed decisions that shape public schools and provide a pathway to success for every student. School directors, who are unpaid elected officials, devote on average up to 10 hours per month to the challenging and complex responsibilities of board business, including adopting policy, voting on budgets, evaluating school security issues, and reviewing hiring decisions. The impact of the coronavirus pandemic has added an additional challenge to school boards as they determine how to best provide for the needs of students and their families in this new environment. To thank these locally elected officials, we have prepared a brief slideshow to recognize each of the 9 members. At this point, I'd like to share my screen with you and give a special shout out to Patty Stevenson for putting together this slideshow. So hope everybody helps take a moment to thank our school board members, and we'll be celebrating you all month. We have certificates for each one of you when we see you in person, as well as I'm hoping to have you serenaded with a student performance next week. So thank you, everyone.
Thank you.
Thank you.
I need to get a different picture.
Me too.
All right, our next presentation is our FNB Wealth Management Program. Sam and Shane.
I believe Sam and Shane are on the call. I don't know if you would prefer that we share our screens or if you would like to have the presentation as you go through it.
Okay, I can share my screen. My colleague Sam had some technical difficulties. He's had dialed him on my cell phone, which is here as well. So I'll go ahead.
Okay.
And
provide an update on your investment account. I've been the relationship advisor on the account, and believe it or not, since March of 2014, at which time, interest rates were falling on the CD side, and you had been gathering those CDs at various organizations and spending a lot of manpower, and what was suggested and really visionary on the board's behalf, took a look at what we could do on the investment side, and I think it's worked out very, very well, and it's been very visionary on your part. And congratulations on the board for your hard work and dedication through these very difficult and challenging times. Shane's going to walk through the presentation and then open it up to questions. So I'll turn it over to my colleague Shane Crawford as a senior portfolio advisor and has the responsibility of investing the funds of the school district. Thank you.
was everyone able to hear Sam okay?
Yes.
Okay, great. I'll get started here just with a brief overview of the economy and the markets, just to set the context for where we're at today with the investment environment. And as we look ahead here to 2021, we think the economy will be marked by the recovery from this pandemic. When we look at economic activity, we are seeing a pickup here. We expect the fourth quarter the economy to grow probably in the neighborhood of at least 4 to 5%. However, for the whole year of 2020, our economy contracted by about 4% overall for the year. So we think things look better looking to 2021, although we wouldn't be surprised if the economy was a little bit weak to get started here in the first quarter. News is good. The bright spots in the economy are manufacturing. Our manufacturing indexes have come back to pretty good levels where we see expansion, and the housing market's been very strong as well, especially with interest rates being low and a limited supply of homes. Housing has been very strong. One of the challenges continues to remain employment. Currently, even though we've continued to add jobs and the unemployment rate has fallen, it's right around 6.7% here when we put this together last month, but still well above where it was earlier in 2020. So a lot of people still outside the labor market, as a number of industries have essentially been shut down at this point. And when we look at some of the economic statistics here in the bottom left for some of the higher frequency data, still a lot of people that haven't found their way back to the offices yet. We look at this and say maybe only about a quarter of people have returned to offices. So a lot of folks working remotely. And over on the right-hand side here on the global economy, central banks have put a lot of stimulus in place to combat the impacts of the economic shutdowns from the virus. Overall, about 33% of global GDP has been injected into global economies. And in the US, we've done a little bit more, close to 49% of GDP. And we're not done yet. There's still more to come. So overall, we think that this sets up for global economic recovery, especially in the second half of 2021, led by the US and China. When it comes to fixed income, which is most relevant to the nature of the securities that we hold in this investment account, interest rates continue to be at historic lows. The Fed lowered interest rates just about as low as they could in 2020 to help stimulate the economy, keep the cost of funds low. Our 10-year Treasury at one point was down to around 0.63%, well below 1%. And as a lot of money flowed into U.S. Treasuries, given the uncertainty that was experienced. And since then, we've seen Treasuries start to go up a little bit. They're now approaching 1% on 10-year government bonds. So that tends to be a good proxy for the bond market. We think short-term interest rates that the Fed really controls are going to remain lower for longer. It's likely that we'll see short-term rates remain low for the next several years based on what the Fed has said. Their goals are full employment and inflation rates of around 2% or a little bit above 2%. So it's going to be a while until we get to those levels, we think, at this point. And of course, the equity markets have responded very favorably to all the stimulus, and they're sort of looking ahead beyond the news that we have today, and expecting corporate earnings to be much stronger in 2021, and for a successful vaccine launch as well. So we don't expect a double dip recession in the current year. So that's our main highlights on the economy and the markets. And I'll just shift gears here and show you a summary of the investment account here as of the end of December. We had some cash on hand in the account from several bond maturities that occurred later in 2020. Work to reinvest that money as well, and also get an indication whether you folks have any liquidity needs to withdraw any funds from this account. And the market value was just over $7 million as of December 31st. If you look in the middle of the page here, this has our investment results. These are our total returns that have been achieved on a gross of compensation basis. So for the year 2020, the portfolio was up around 3.66%. And the longer term numbers here, the 3-year, 5-year, and since inception numbers, that goes back to 2014, those are annualized figures. So the accounts returned around 2.65% annually since 2014. And the numbers below that are benchmark numbers based on our investment policy. It's a combination of 50% in the Treasury bill index and 50% in a 1 to 10 year municipal bond index is what makes up those benchmark figures. So we've been able to achieve results that are a little bit higher than those benchmarks, which is our goal overall.
Right,
And on the
Shane,
bottom, yes.
this is Susan. Sorry, I didn't know if I should just ask while we're on this slide for explanation to the board. When I look at the top, the yellow cash and equivalents, and then the blue is fixed income. So it's $1 million approximately is sitting in cash right now in this account. It is not reinvested, correct?
As of this point in time, we had $1 million in cash. I have put through several purchases for some bonds, and some of those have filled here in early January. So those trades haven't been reflected yet in those figures. So the cash on hand right now is lower than $1 million.
Okay, one of the things we've been talking about is just not knowing where the state budget process may land this year and the need for cash and how soon that may happen. So I just wanted to let them know how much of this is already sitting as available cash.
Okay.
I don't mean to interrupt. This is Elizabeth. Susan, do you feel confident or given that there's so many things that we don't know what's going to happen this year, do you feel that that's enough money for a cash?
At this time in this account, I feel I'm comfortable with this. Sam and Shane both are in constant contact with us about how to reinvest and when to invest in our cash needs. So I think I'm good with this, and I'm pretty sure Shane's presentation later might get into what else is callable and when it is, and our options later in the year.
Thank you very much, Susan.
Yep.
Okay. And the only other item I just wanted to cover on this page, if you can see it on the bottom right, there's a cash flow summary. It just shows you the activity that occurred throughout 2020. We started the year with 7.804 million. There was just over $1 million in withdrawals. And the income, that's the interest from the bonds and money market, was just over $182,000. And then the gains of 84,414, that's just due to interest rates coming down, and the market value of the bonds went up as a result, because we had bonds at more attractive rates. So as the interest rates went down, the market value of the bonds went up. So we saw a little bit of increase in value due to market fluctuation. Okay, the next page, I'll skip that. That's just the benchmark that I went over. This is a similar page to what we already went over. These holdings here are as of the 5th of January when I printed these reports off and put this together. This slide right here just shows how much money we have coming due over the next few years. So typically, we buy these bonds and hold them to maturity. So in 2021, we're likely to get in another $1.5 million from bonds as they mature throughout the year in 2021. And then 2022, we have another $1.05 million that matures. In 2023, $1.525 million. That's where a majority of the money is invested right now. Additional maturities are staggered out across 2024 through 2028. I can see on here that there's a yield column. This is what we call the current yield. The current yield is simply the estimated annual income from the bonds divided by the market value of the bonds. The yield to maturity, YTM here, this figure here takes into consideration sort of the time value of money. You can think of it sort of like an internal rate of return. If we hold these bonds to maturity, they pay all the income and it gets reinvested. That's the estimate for what we would get right now, and that's just due to the market value going up. There's unrealized gains in the portfolio. This gain loss is simply unrealized gain, just the difference between what we paid, the cost basis, and the market value. So there's unrealized gains of just over $200,000 in these holdings right now. And the next few pages just show the current list of holdings that we have by year. So the next maturity that we have is in early March. GE Capital Bank CD for $250,000 matures, and these are organized by maturity date. So you can see throughout the year we have various maturities from March through December. And we can be in touch with you to see if you have any needs at that time.
And I'm not sure which director asked the question. This is Sam. Susan definitely hit the point on communication, and with the cash needs of the school district, and as someone mentioned, not knowing what they may be, the communication with Susan's office will be in touch with her often to make sure that if needs arise, the money's available.
And what I invest in here, we invest in brokered CDs, certificates of deposit that are backed by the FDIC. So we invest in these up to $250,000 per issuer so that they're covered. And the other investments that we make are into Pennsylvania municipal bonds, either school district or other counties or townships that are general obligation bonds backed by the ability to tax. So these are obligations of the Commonwealth or its political subdivisions. Those are the holdings that we have, in addition to the money market fund, which is a U.S. Treasury money market fund. I'll just stop there just to see if you have any questions. Here's the other holdings are included here as well. So.
Just a point of comment. I find it somewhat amusing that we as a school district are actually buying other school districts' debt.
Right. Yeah, it's one of the eligible investments that the state guidelines permits. Sometimes we can pick up some more interest on the municipal bonds, and that's what we look to do. I'll also look to provide you with last time we did our investment policy was back in 2014. So I'm going to do to revisit that with you as well, and just look to get any updates made to that in the current year. That'll be on our list of things to communicate with you about in 2021. Any other questions or anything else that Sam and I can help with?
Being respectful of your time and your agenda, please let us know if there's anything we can address at this time.
Will do. Thank you, Sam and Shane. We have monthly finance meetings, so if there are additional questions or concerns, we can invite you to one of those committee meetings to address any additional follow-up stuff we may need.
Okay, that's perfect.
Yep. Thank you very much.
Thank you, gentlemen.
Good luck. Thank you.
Okay. So our next presentation is our annual Baker Tilly audit report from John Compton and John Singer.
Good evening, everyone. Appreciate the opportunity to be with you here this evening. We'll do a quick sound check. Everyone hear us okay? All right,
Yes.
great. My name is John Compton. With me tonight is John Edinger, and I also believe our Kate Mallory is on the call here this evening. We have a brief presentation. We'll probably look to spend about 20 minutes or so tonight going through the audited financial statements. The preparation of your financial statements and the audit thereof in this day and age is a highly complex technical matter. So to kind of pack that into a 20-minute discussion is a bit of a tall order, but what we're going to try to do is provide what we consider to be the key highlights from the audit process. So we're happy to spend as much time as you may need. If there's anything that we don't touch on that you have any particular interest in, please feel free to stop us as we go, and we'll do our best to answer your questions. The audit is complete at this point in time. The district is a June 30 fiscal year end, so we're talking about the June 30, 2020 audit. The audit is complete. It was delivered to Susan and Joni, I think on December 22nd or the 23rd. So it's kind of hot off the press, if you will. You got the audit done in plenty of time. The federal deadline for the single audit is actually March 31st of 2021, which is when it's also due to the state. But because of certain of your bonds that are outstanding, you have what is known as a continuing disclosure requirement to your investors that just happens to be due on December 27th. So that filing, I believe, was made on time. It was a little bit of a different audit process this year. For years and years, our industry has been moving in the direction of doing things electronically. And in 2020, because of the pandemic, much of our audit work, not only with Keystone, but with other clients of all shapes and sizes, was done remotely. So we worked in sessions such as this one right now. We had, I couldn't tell you how many Zoom meetings with Susan and her team. We use a website known as Huddle, which is a secure data sharing site where the district would post information out there. We will go grab it electronically and kind of do our audit procedures to it. And all of that being considered, I think the timing was pretty much right on track. It really wasn't any different than it was in prior years. You might wonder how one could do an audit remotely, but so much of what we do is gathering of evidence. And much of it we get externally from your bankers and your bond trustees and so on and so forth. So with all of that coming to us electronically, it's a very doable sort of thing. We might have had some time, we call it working in the field on this audit, but for the most part, it was done remotely. Susan and Joni and the rest of the folks there are always super well prepared for this process. That helps. It enables us to function or focus on what we need to consider from a professional judgment standpoint, as opposed to debit and credit accounting matters. We certainly take those things into account, but if the bookkeeping's not good to begin with in an audit, it just really bogs the whole process down. So we appreciate that very much. That being said, and actually before we get into the details tonight, I think you'll find as we go through these numbers that it was a pretty solid year financially for Keystone Central. Interestingly, the firm does a lot of this work. We're finding in all of the schools that we've audited thus far, for the most part, the majority of schools had a pretty good year financially. I think it was attributable to the fact that the revenues were pretty well locked in, maybe with the exception of some of the local earned income tax dollars. Those might have been affected toward the second quarter of 2020, which would have been the final quarter of your fiscal year. But those weren't affected materially enough to really have a significant impact on your June 30, 2020 financial statements. So that being the case, and the fact that the district realized some savings because you didn't have students kind of live and in the classrooms for a better part of that second portion of the year, you'll see it was a pretty good year financially. So I think someone is running the slide projector here. John, is that?
Yes, sir. I'm just bringing it up.
All righty. We'll jump into it. John, if you could move to slide 3, please.
Am I there, John? Are you seeing slide 3?
I am. Thank you.
Okay, good deal.
So just
All
in
right.
terms of an executive summary, the whole concept of an auditor auditing a set of financial statements, as I mentioned previously, we gather evidence. Our process culminates in the form of an opinion on your financial statements. There are external third-party users of your financial statements. These go to the federal government. They go to the Commonwealth of Pennsylvania. Any of your bondholders or investors would have access to these audited financial statements. The taxpayers may want to see this information. So there's all sorts of third parties that would obtain these financial statements. Our opinion, our being independent from Keystone Central and our giving an opinion on this information adds assurance to the process. Those third-party users can rely on the information that the district is producing because we're independent. We test the data and it all culminates in the form of an opinion. We offer 2 opinions as part of this process. The first is on the district's financial statements themselves. And we provided what we refer to as an unmodified opinion on your financial statements. That's the highest level of assurance we can provide as auditors. It means without exception, in our opinion, the financial statements are fairly presented in all material respects in accordance with generally accepted accounting principles. The second opinion that we provide, because the district receives and expends more than $750,000 in federal financial assistance, we need to do this special type of audit known as a single audit, where for all intents and purposes, we're kind of standing in the shoes of federal auditors that would otherwise be kind of on-site auditing the district's compliance with your various federal programs. And we select the federal programs we're going to audit on a rotating basis. The program that was audited as major for June 30, 2020 was the Title I program. And we were able to provide an unmodified opinion on your compliance with that program for 2020. And as we mentioned there at the bottom of that slide 3, that your general fund balance increased by about $3.6 million. And we'll talk about the details on that here as we move through the presentation. So John, if you could jump ahead to slide 6. Yeah, I will say, folks, I think there's probably 60 slides to this presentation. We're not going to go through all of that. There are certain required communications that are supposed to take place between the audit firm and the board of directors or the audit committee or the finance committee, whomever we might deal with. So we've included that information as appendices to this presentation. We certainly encourage you to read it. If you have any questions about kind of the roles and responsibilities of the audit firm or management or any of those things, you can certainly reach out to us at any point in time. So there on slide 6, one of the things that we're focused on is the budget versus actual of the school district for its year ended June 30, 2020. If you were to look on page 18 of the single audit, that's where you could find this. And we've summarized that information here for you. But back to my comment at the onset that it was a pretty good year financially. Your actual revenues, or those that you actually collected or accrued for June 30, 2020, were approximately $2.8 million greater than your final budget. There's a number of factors included there, probably the most significant of which was additional state subsidies related to the retirement, the employer share of retirement. Even though the district pays a pretty sizable amount of money into PSERS, you get approximately a 50% subsidy reimbursement from that. And in 2020, that was about $990,000 greater than what was budgeted. That's a somewhat difficult thing to budget. It's based upon certain census data that's provided to the Commonwealth. Sometimes there's some timing differences there. In certain years, you might receive less than what was anticipated. In other years, you make up for it. And that was the case in 2020, but that was a pretty sizable piece of that positive budget variance with regard to your revenues. Other areas there was a $283,000 transportation subsidy that was more than what had been budgeted. The district has been pursuing certain of the local taxes, the business privilege tax collections were greater than what were budgeted. There was about a $590,000 positive budget variance there. And your actually your earned income taxes were about $150,000 more than what was budgeted. It will be interesting to see what plays out with that local earned income tax in 2021. We're thinking in all likelihood that will be down, just given the pandemic and the levels of employment and so forth. But 2020, that was not the case, at least not in the revenues that were reported by the district. Looking at the expenditure side of the statement of revenues, expenditures, and changes in net assets, fund balance, your expenditures were about $1.1 million less than what was budgeted. So we had a positive revenue variance of about $2.8 million, a positive expenditure variance of about $1.1 million. If we factor in certain what are referred to as other financing sources and other financing uses, those would be things such as budgetary reserves that you didn't tap into, or transfers out of the general fund that might be made to either food service or your capital projects fund. The net result was a positive $3.6 million budget variance in your general fund, or you fared better to the tune of about $3.6 million than what your 2020 budget had anticipated. John, if you could hop ahead to slide 8. One of the main key financial indicators of any government that financial analysts will look at is what is known as the general fund balance. That's the equity of your general fund. It's the difference between the assets and the liabilities of that fund. And there are certain expectations of where a government should maintain that balance. There is a Government Finance Officers Association, the so-called GFOA. GFOA has all sorts of best practices that it puts forth that state and local governments, if they're so inclined, could follow. Their recommended fund balance for a general purpose government is that you maintain about 2 months worth of operating expenditures within your fund balance. So we would take your an annual operating expenditure budget, divide it by 12, multiply that by 2. And in Keystone Central's case, kind of looking ahead to your June 30, 2021 budget, that 2-month rule of thumb figure would be approximately $12.8 million would be kind of the goal that we would be shooting for. Keystone Central's actual general fund balance for June 30, 2020 was $15.6 million. So you're a little bit ahead of that GFOA 2 months recommendation. And there are nuances to this scenario, which we'll talk about here in a moment, but just kind of stepping back, looking at this from 50,000 feet, your general fund balance is, your actual fund balance was 15.6 million versus this $12.8 million benchmark that I had mentioned. John, if you can move along.
This is
Yes,
Susan.
ma'am.
Yeah, before you jump off this page, I just want, during our last finance meeting, we actually had this conversation, and I thought that was a 3-month recommendation. So I just want to make sure I point out to those board members that I did tell them 3 months and it's 2. So I stand corrected. Thank you.
And actually, Susan, 2 months is what GFOA would consider the minimum fund balance. 3 months is, from our standpoint as auditors, it's all the better. But the GFOA benchmark that they put forth is 2 months, and it certainly is a judgmental type of thing. It's what you think you might need in the circumstances. Looking at Keystone Central, and we've made the point for some time that you were heading in the direction of having no long-term debt, which is no longer the case. I think there's about 30 million or so now in long-term debt outstanding. Having that liability and then just all of the uncertainty with what's going on in the world today, 3 months is better than 2 months from our standpoint. But the GFOA rule of thumb is 2 months. And again, from their standpoint, they're saying that should be a minimum fund balance.
Thank you.
Yes, ma'am. Taking a look at slide 9, if you will, John, just to talk a little bit about this fund balance and its composition. And again, we're talking about the equity of your general fund. This is what's left if you were to have paid off all of your liabilities as of June 30, 2020. And there's different categories or buckets, if you will, of your fund balance. We can see there on slide 9 that the total fund balance was 15.6 million. Approximately 8.9 million of that, or it's the darker green slice of the pie there, is what we refer to as committed fund balance, or those are dollars that the school board has set aside for specific purposes. That 8.9 million is committed. There was 5 million of that was committed for future public school employees retirement system rate increases. There was 2.1 of that 8.9 that was committed for health insurance reserves, and about 1.5 million committed for capital project needs. So those are dollars that the district has earmarked or set aside for specific purposes. You can undo those commitments at any point in time, or you can further commit dollars at any point in time. And then the other piece there, the lighter green piece of the pie was about 6.1 million. That's what we refer to as the unassigned portion of your fund balance. And that would just be available for general appropriation kind of rolling into that next year. We have governmental clients that don't earmark or commit any portion of their general fund balance. We have others that commit every red cent of it. So Keystone is somewhere in the middle. You've got approximately 8.9 million of your $15.6 million fund balance committed for specific purposes. John, if we can move on to slide 10, just this next slide here is looking at it from the standpoint of the 2-month suggested fund balance is the dark green bar. And on the left-hand side of the screen, we're looking at the unreserved portion of the fund balance or unassigned portion of the fund balance. If we're comparing just that piece that the district board hasn't kind of set aside for these specific purposes that I just mentioned, you can see you're falling short of the 2-month suggested balance. If on the other side of the token, we look at the right-hand side of the page and we see that looking at both the committed and unassigned portions together, we're exceeding the 2-month suggested balance. And knowing that the district, the board can commit more or less at any point in time, we're just kind of looking at it from an overall standpoint. And from our perspective, your fund balance is well positioned. I think we have one more slide on fund balance, John, which is slide 12. There it is, which is a 5-year kind of look at the fund balance. Back June 30, 2016, you were sitting at about $18 million. Then for the next 2 fiscal years, this was on a downward trend. And what causes this? What would cause your general fund balance to rise or fall would be in any given year, if your revenues exceed your expenditures for that year, your fund balance is going to increase. In any given year, if your expenditures exceed your revenues, then the fund balance would decrease. So it's that, and I hesitate to use this commercial term, but it would be that net income or net loss for the year that would hit this fund balance. So 2016, sitting at approximately 18 million, 2017, 2018 dropped down to just about 10 million. And then 2019, 2020, it's back on the upswing. And again, we feel you're in a pretty solid financial position at June 30, 2020. So I'll stop there before we turn it over to Mr. Edinger. John has some historical information, just looking at revenues and expenditures over the past 5 years. See if anyone has any questions on this, the audit opinions or the fund balance or the budget versus actual or any of those types of things that we've touched on thus far.
Do any of the board members have any questions or comments? Okay, we can keep going.
Okay, Mr. Edinger, if you would, in
All right.
some format, please.
Absolutely, John. Well, good evening, everyone. As John said, I'm going to go over some of the key areas of the 2020 audit in comparison to the historic results over the past 5 years. A lot of this information can be dry, so I'll try to keep it moving along. But certainly, if anybody has any questions, please just speak up. So on slide 13, you'll note a bar graph presenting general fund revenues. These are sorted and broken out by local, state, federal, and other funding sources. For 2020, you'll note state source revenues of approximately $39.8 million and local revenues of approximately $35.4 million. Federal revenues of about $2 million and no significant other revenues for 2020. So all three categories of revenues have increased over the prior year. However, they're all within a consistent range, so to speak, with state revenue falling between $35 million to $40 million over the past 5 years. Local revenues ranging between 30 to 35 million over the past 5 years, and federal revenues ranging between 2 to 2.5 million over the past 5 years. On slide 14, you'll note a bar graph similar to the previous one. This graph presents general fund expenditures broken out by function. As you can see, these functions are noted as instruction, non-instruction, support services, debt service, and interfund transfers. As you will note, the two most significant functions or classes of expenditures are instruction and support services. Instruction includes expenses such as teachers' salaries, benefits, supplies, whereas support services include expenses such as those related to administration, business office, operations and maintenance of the district's buildings and grounds, and transportation. So during 2020, total instruction expense and support service expense was $49 million and $20 million respectively. As you can see on the chart, both the instruction and support services functions are fairly consistent with prior years, with instruction expenses ranging between $46 to $50 million and support services consistently right around the $20 million mark. Remaining general fund expenditures for 2020 consist of approximately $1 million of non-instructional expense, right around $2.1 million of debt service expense, and $1.1 million of transfers from the general fund to the capital projects fund. On slide 15, as of June 30th, 2020, the district had governmental capital assets with a net book value totaling right around $36,842,000. This is the total cost of acquisition of these assets, net of accumulated depreciation at June 30, 2020. For 2020, capital additions totaled $6,682,236. These additions consisted primarily of the ESCO and roofing projects that are ongoing at the district. And total depreciation expense for 2020 was right around $2,481,000. As of June 30, 2020, the district's business type capital assets were right around $90,980 net of depreciation. And there were no capital additions, and depreciation expense was right around $14,000 for the year.
And John, just to clarify for the board, those business type capital assets would be your food service operation.
Correct.
Excuse me, John, if I may interrupt just for a second. For the last slide, you just said, I understand what the word depreciation means, but what's a depreciation expense?
That would be the portion of depreciation, the actual expense of the depreciation in the current year. Whenever you're capitalizing a fixed asset, you're going to depreciate or amortize that asset over a number of useful years, and you're essentially going to break up the cost, the acquisition costs between that useful period. So to speak, you purchase a piece of equipment for $50,000 that you're going to depreciate over a 5-year period. Each year, you're going to take $10,000 of that acquisition cost and expense as the depreciation for any given year.
Okay, so it's not a physical expense, it's just a natural depreciation of the age of an item.
Absolutely.
Thank you.
Where this gets confusing, Elizabeth, These financial statements are what the Governmental Accounting Standards Board refers to as dual perspective financial statements. So there's a full set of full accrual financial statements where these assets get capitalized and then depreciated over their estimated useful lives and kind of expensed in that manner. And then in addition to those full accrual financial statements, there's another set of what are referred to as modified accrual basis financial statements, where in those, when you buy a capital asset, you expense it in that year, it's budgeted for in that year, paid for in that year, and it's kind of end of story. But it is the model that we need to abide by under governmental generally accepted accounting principles. It gets a little confusing.
Thank you very much. You explained it very well. I appreciate it.
Yep.
All right, moving on to slide 16, we're going to go over long-term debt here. Long-term debt, the district increased in the current year due to the issuance of the 2020 governmental obligation bond. Total proceeds of the 2020 bond amounted to approximately $25.2 million, which brought the district's total outstanding bonds and notes at June 30, 2020 to approximately $32.4 million.
And John, I think we have a typo in that slide there. We say at the bottom, debt service approximates 41.57% of operating expenditures.
Yeah,
I think that.
Yeah, I took notice of that when I was reviewing this right before we started the meeting, and yeah,
I think that's 4.157%.
Yes.
We'll double check that, but there's no way that debt service is 41% of the district's overall budget.
Oh my
Makes
goodness.
me feel a little bit better.
Yes. Didn't mean to alarm anyone with that.
All right, moving on. On slide 17, you'll note a schedule of the district's required Pennsylvania Public School Employees Retirement System pension contributions, or for a shorter acronym, PESERS. For 2020, the district's contractually required contributions totaled $9,609,105. As you can see, the required contributions have decreased over the past 2 years. This is mostly due to a reduction in the district's covered payroll from a high of approximately $35.6 million in 2018 to currently right around $29.5 million in 2020. Again, as John had mentioned earlier, approximately 50% of the PESERS contributions are subsidized by the state.
We're encouraged to see this going down. This is obviously a huge expense for Keystone Central and any of the other 501 some school districts in the Commonwealth. If we were to look at this graph back maybe another 5 years or keep going back into the early 2000s, the district's share or the employer contribution to this plan would have been minimal as compared with what it is today, where it's John, if you could actually go back to the prior slide.
Yeah.
You can see it's right around $10 million. That's a huge chunk of the district's budget. If for the number of years that these number of school districts have been contributing at these rates, and it's been probably a good 10 years now that we've been paying rates of 30, high 20s into the 30s. And as well as the investment markets have done over the past 10 years, you would think we would start to see these rates start to decrease. But that doesn't seem to be what PESERS is calling for, at least in the short term. But there have been an awful lot of school districts and intermediate units and VOTEC schools and libraries and community colleges and you name it that have been paying rates of 33, 34% for every dollar they're paying their teachers. You would think that would start to have an impact on the unfunded net pension liability of this plan, and hopefully it soon will, because it would be nice to get some relief from this cost.
Absolutely. Moving on to slide 18, you'll note a schedule of the district's proportionate share of the net pension liability for PESers. And again, as John just described, you can see a significant decrease in the pension liability for 2020 with a balance of approximately $100 million at June 30, 2020. This is a total decrease of right around $32 million from a high of $132 million in 2018. Moving on to slide 19, you'll note a schedule of the district's proportionate share of the net OPEB or other post-employment benefits liability for PESers. Now, similar to the net pension liability, the OPEB liability has decreased over the past 2 years. For 2020, the OPEB liability at June 30 totaled right around $4,547,000 as compared to a high of $5,444,000 during 2018. Slide 20 presents a schedule of the district's local OPEB plan liability, which is separate from the PESers OPEB plan liability. The local OPEB plan liability has a balance at June 30, 2020 of approximately $16.8 million. And this is an overall decrease as well of right around $400,000 from the prior year. On slide 21, we note some information regarding the district's 2020 Uniform Guidance Compliance Audit, or the single audit, as John had mentioned earlier. On page 63 of the 2020 financial statements, you'll see the schedule of expenditures of federal awards. And as the name implies, the schedule outlines the district's total expenditures of federal funding during 2020. In total, the district expended right around $4,216,000 in federal financial assistance during fiscal 2020. This is fairly consistent with fiscal 2019, where the district expended right around $4 million. I will say the single audit went very smoothly this year, and we did not identify any findings related to the district's major federal program. So in summary, the audit went very well, as John said. Everything was very smooth this year. The district's doing well financially. The district's general fund balance is in line with the TFOA recommended guidelines, as John went over earlier. Internal controls are in place, and we found no material weaknesses during this year's audit. Now, this is all due to the fine staff within the business office, and on a personal note, it is a great pleasure to work with them, each and every one of them, on an annual basis. That being said, are there any questions?
Any questions from the board?
I don't have questions, but I got a statement. John Ettinger, I love your background.
Thank you. Thank you. I just realized that my office is kind of in a shambles right now. So rather than subjecting everybody to that, I thought I'd give them something nicer to look at.
Well, it looks good.
Wonderful. I'm glad you enjoyed.
If I could just ask a question in general with regards to the fund balance. Since I've been at Keystone Central, we've been talking about the dangerously low fund balance. So how, and you can certainly see that we've been making some efforts not to touch that while finding a balanced budget. How would you classify our current fund balance? Comfortable, too high? Like, where would you, as the experts, say we are with that?
From our standpoint, your general fund balance being at, I think it was 15.6 million at June 30, 2020. We think that's kind of right in your sweet spot. That's we think it's we had the discussion a few minutes ago about is it 2 months or 3 months. The standard rule of thumb would be 2 months. That's a little more than 2 months. From our standpoint as auditors, we're conservative. We would always like to see more in fund balance. There were years when Keystone Central literally had $50,000 in its general fund balance. So over time, over the years, it really kind of set a sufficient amount of money aside. I mean, this school district is too big of an operation to try to operate without sufficient reserves. When you think of if all the revenues stopped coming in, we could function for 2 months before we burn through that fund balance. That's not an unreasonable cushion to have, if you will. But we think you're in a good spot with it. It's certainly not excessive, but it's nothing that I think anyone would look at and say, "Oh boy, they're very thinly capitalized there." There's a concern. Any bond rating analysts looking at this would, I think, come away from it understanding that you've been pretty good stewards of your money, and you know, that there's a sufficient reserve there for just the uncertainty that is out there in the world today.
Thank you. Sweet spot's a good place to be. Also, I want to thank you for your evaluation of this and your audit, as well as the efforts of our business office personnel and leadership, and Susan and Joni, and also the finance committee. So we're going to continue to pay due diligence to this so that we are stay in that sweet spot and continue to, we're looking at out year projections as much as we are current year. So this is very helpful. Thank you.
Yes, ma'am.
John,
Yeah.
question for you. The couple slides back, you showed where we had like 12 million and the 6 million. You know which slide I'm talking about? Where you said we were like less than half, but on
Yes,
the
sir.
other one.
Yes, all right, right there.
There it is,
Yeah.
John.
So, I mean, which one of these should we actually be looking at?
You know, the GFOA 2-month rule of thumb that I had mentioned earlier, they're talking about unassigned fund balance. So by their rule of thumb, which would be the 12.4 million, your unassigned fund balance isn't there. But I think you need to take into consideration the district has about 8.9 million that's committed by the board that you could uncommit and easily achieve that mark. So I think our point with this slide is knowing that there are different measures of fund balance. If we were to look at just that piece that you feel is truly unassigned and available to roll into the future year, you're underfunded, but knowing that these reserves are just that, as it relates to the committed portion of your fund balance, the board can commit or uncommit those dollars. It may or may not need them. We think from an overall perspective, you're in a pretty good spot with your fund balance. I guess the fact that those committed dollars are under your control, you can do with them what you want, relieves any concern that the unassigned fund balance isn't quite at the 2-month position.
Okay, my biggest concern though would be the fact that, I mean, granted, we do have committed fund balance that we are in control of. However, there are things that are out of our reach or out of our control as far as controlling those committed fund balances. So we should actually be looking at trying to increase the unassigned fund balance. Would you agree with that or not?
To the extent that you can, you should.
But
Okay, thank you.
Hello, Roger. To build off of what Roger's saying, would our credit rating, be better if the unassigned funds were at a higher level, or does it not in any way influence our credit rating?
I think that certainly your total fund balance affects your credit rating. I think if there is evidence that you've managed your fund balance well over time. If you have a policy with regard to fund balance and how much you're going to use in any given year, that's what is kind of considered when a rating analyst is looking at your overall financial health. If where governments get into trouble here is during budget time, you know, we're not going to budget realistically, or we're going to continue to use fund balance to budget our deficits, and that fund balance erodes over time. That's where the credit rating gets a knock. So I don't think that there's any real, I think that bond rating analysts know enough to look at total equity, and that's kind of the first pass at this. And then if a government is kind of earmarking certain portions of equity for specific purposes, I think they would view that as kind of a sophisticated approach to managing your operation, and wouldn't necessarily find fault with having too much in committed versus not enough in unassigned.
Good. I just make a quick comment that I'm very pleased where we are at the fund balance personally compared to where we were a couple years ago. I think we're in much better shape, and as you said, we're kind of in a sweet spot. And I guess you can overfund your fund balance too. I guess not that we have that problem, but I'm happy with where we are, and hopefully we can increase that as we go. But I also want to just say thank you, John, and your team for all your work, and especially to our folks in the business office, Susan and Joni and everyone who've done such a really great job, not only with the audit, but with managing things over the last couple of years. That I think they've done a great job. So I want to give them some kudos too.
Any other questions? or
Well,
comments?
thank you, everyone. It's nice to provide. I know it's been a difficult 8-9 months there at the district with just trying to manage this pandemic. So to have some decent financial results, it's nice to be able to provide that good news.
Thank you. We appreciate your work, and we're
Yes, ma'am.
with the strides that the district has made in the last few years. It's great. All right, thank you.
Good night, everyone.
Good night.
Good night.
Thank you.
Good night.
Thank you.
Thank you.
Before we move on, a couple of housekeeping things. Eric Perbury and Polly Donhay are now on the meeting. They were able to get on. And also, I forgot to mention, there is an executive session on December 10th from 6:30 to 8:35, and that was discuss personnel and negotiations. And this evening, we had an executive session before this meeting from 5:44 to 6:30. So the next is hearing of visitors, and there was nobody signed up, correct, Tracy?
That's correct.
All right, so we'll go into superintendent's report.
Jackie, you're muted.
Thanks for not letting me get too far along.
No problem.
We have quite a few updates for you this evening. Keystone Central School District is ready to transition from a full remote model to a hybrid model of instruction beginning on Monday. Students have been divided into 2 cohorts and will attend school on scheduled days. This learning model will help us to comply with the attestation requirements that were approved by this board and PDE in November. Earlier today, the Department of Health and the Department of Education announced new recommendations for elementary students based on recent studies. They believe that the elementary students are at very low risk for COVID-19 and the harmful effects of not having in-person instruction are more detrimental than their risk of contracting the deadly virus. They permitted each district to determine their own instructional model and to consider this new information. I plan to seek additional information and work with my administrative team to determine when we can follow the recommendation with compliance and to the safety precautions. So more to come on that, but right now we are slated to begin with the hybrid model on Monday. Our curriculum and technology administrators have updated the instructional resources for teachers and parents as we move into this hybrid model. Our special education staff has been working with parents to provide COVID compensatory education, which includes after-school instruction 2 days a week for students with disabilities. This program also begins next week. We've been able to use grant monies to cover the additional costs and salaries and the transportation. In addition, we've added an after-school tutoring program at Central Mountain High School using additional grant funding specific to Central Mountain High School. We are focusing on students who struggle with attendance and academics or need credit recovery. This program is currently limited to Central Mountain High School as a strategy to address targeted school improvement initiatives. Vaccine distribution update. We are anxiously awaiting information regarding vaccination of our employees in phase 1B. We have learned that our school nurses should be included in phase 1A. We're actively working to secure a location for this group. As of about 2 hours ago, I found out that we do have a location. We're just waiting on a date for our school nurses. And then we'll, as soon as we know anything for our employees, we will get that out to everyone. I'm pleased to announce that Keystone Central was awarded a $250 holiday donation in December. This award was provided by the Pittsburgh Regional Food Service Directors, and these funds are being used to support our student backpack program, where we send food home with students over the weekend. Earlier today, I learned that Mr. Lynch, our director of the CTC, and his team secured a $3,000 grant to support our culinary arts program. The funding for this grant was provided by the Pennsylvania Restaurant and Lodging Association Educational Foundation. And on this evening's agenda, you will notice an updated athletics health and safety plan. The only changes reflect the updated mask order for athletics. Our winter athletes were finally able to start their preseason on January 4th. And I've asked our secondary principals and athletic directors to closely monitor the practices to ensure compliance with our health and safety plan. And I'm going to ask that the principal Mike Hall from Bucktail give you an update on our Bucktail athletics, followed by a brief update from Central Mountain Athletic Director Stephen Hafley.
Hi, thank you. Bucktail athletics have really started off well this week. So we really have basketball going on. I've been able to monitor. We're able to follow the plan, but more so the excitement of the students and the coaches is really evident as they've gotten back into practice. They're able to get out, they're able to do some exercise, watching them do some drills even this evening too. They're following the rules just as they need to, and there's a lot of excitement. Another thing too I wanted to add is the excitement with the swim team from Central Mountain going to the rec center. And that's been a great thing too for our athletes, as Bucktail does have a swimmer, but it also has given our students who work at the rec center on a regular basis through lifeguarding and so forth to participate. So that's been a great thing. And I saw a lot of smiles when I went to the swim practice.
Hey, thank you, Mr. Hall. Good evening, everyone. And I just wanted to start off by saying thank you to the school board for everything that you do and volunteering, countless hours. So I appreciate that. Just to give an update for athletics as well, down here at Central Mountain, athletes have been doing great with the mask protocols. I've checked in every night, and everybody has their masks on. Everybody's practicing social distancing. Practices have been very spirited, upbeat, lots of energy. The students are really happy to be back and see their friends, and it's great for their social health, their mental health, and obviously their physical health. Teams are beginning to start to knock the rust off, and they're getting ready to start competition here within the next week. And that's pretty much it.
Thanks, gentlemen. I know there's a lot of excitement around that, and I feel that nobody really is excited about having to wear a mask when you're involved in rigorous activity, but I know that our students and parents feel if that's what's necessary for us to participate, we'll do whatever it takes. So again, we're monitoring it closely. We're not just taking it for granted. We'll continue to do so. As far as spectators, based on some agreements with the leagues that we're in and consultation with our administrative team, with indoor guidelines, we're looking at permitting, and you'll see that on the updated athletics health and safety plan, that we're looking at permitting 2 ticket vouchers for every student athlete in our programs, and that we will not be permitting visiting spectators at this time, which is also the practice of many of the teams that we'll be competing against. And that's all I have.
Dr. Martin, if you wanted, I would also just provide some information about the live streaming for.
Oh,
Yeah.
great addition. Yes. So since you have that information, I believe the Record Online is going to be live streaming our our home events from Bucktail and from Central Mountain High School. What we're not sure is many of the away events, they may not be permitted. However, the school districts that we go to, if they're not permitting our folks in, they are going to provide us with the link to the live stream that they're providing.
Yes, yes. Some of that will be through YouTube, but media and social media will all have those links so that all parents and families can access all games.
We are getting some updates on swimming. I know that's going to be important. The rec center can't host, because the pool's not a regulation size for meets, we can't host our actual meets there. So I know that Stephen's been reaching out with those school districts that we compete against and ask them to host the event. We would be paying for the officials and so forth. So we're gonna have some additional transportation costs this year with swimming, but the overall cost should not exceed our budgeted amounts within the athletics budget, especially since we've had so many canceled events. So we're looking at that, and we're trying to find out some information for parents as to whether or not, when we are hosting a swimming event at another school, that if they're going to allow our parents to come in at that time. So swim parents, stay tuned. We're trying to get you into those events as well. Thanks for adding.
All right. Thank you, Dr. Martin. Thank you, gentlemen. All right. So happy we can finally get going again. So we're going to be moving on to our committee reports. Curricular, co-curricular, is that Eric?
Yeah, Tracy, we didn't have a meeting since our last voting session. We're scheduling, I think, for the 18th of this month.
Okay, great, thank you. Facilities, Jeff? Jeff? Are we on?
Sorry, I was muted. I apologize. No, we also have not met since our last meeting at the end of November, but we are scheduled to have a meeting here at the end of this month, I believe on the 26th at 1:30 p.m. So I'm sure that'll be advertised. So we'll have something for us at the next work session.
Great. And finance, Eric, that's you also.
Yeah, we met on Tuesday, January 5th. We obviously talked about the presentations that we listened to tonight, the financial presentations. You'll see a resolution.
We lost you. What is
The resolutions to, Eric, you popped out. We can't hear you, but
Okay, am I back?
you're back. Right at the resolution.
Okay.
And
he's gone.
Just like that, we're gone. The resolution is to not raise taxes above the Act 1 index. And that is on the agenda.
Sure. Am I gone again?
Yep.
Oh, you're back for a second.
I don't know what's going on. So we talked about virtual academy staffing. and the extra needs there. So I'm sure we're going to either repurpose some staff or hire additional staff to help with those needs. The budget meetings, I guess the business manager is in that process now, going to all the departments and going over their needs for the coming year. And we got a budget update, a small budget update from Susan. And I guess there's still some concerns and unknowns with the state budget. So, I mean, she can elaborate on that if she'd like to.
I'll just jump in quick and say that we'll know more on early February. We have a webinar outlining the Commonwealth's proposed budget, so we'll know more about where that's headed next month.
Thanks, Susan.
And just to cap that off, I feel that we're on target for what we've shared with the board all along, our budget timeline for closing that budget gap, and that we are on track for not raising taxes for the upcoming school year.
Anything
And that's
else?
about it.
Thank you. Personnel negotiations, Bo?
Yes, the Personnel and Negotiations Committee met on December 21st, first day of winter, but we had good progress. And we have worked out one of our upcoming labor agreements as mentioned in exec session, and we'll be asking for a vote on that next week.
Thanks. Policy, Wayne's not on. Is there another member of the committee?
We didn't meet.
You didn't meet? Okay, perfect. Safety and security?
Thank you,
I missed
Tracy.
something.
Go ahead, Jackie.
Sorry.
I was just going to mention about policy. I believe we have a meeting coming up next Wednesday. And we have several policies that we are going to be going over. And I think there's 3 on tonight that for first read that we'll probably be talking about more in depth, that I would imagine, on Wednesday. That's it.
Thanks, Jeff. Okay, Roger.
Okay, so safety and security has not met since, well, like November. And we will be meeting on January 13th at 6:30. However, it will be an executive session due to safety and security concerns.
All right. Thank you very much. Okay, so under reports, which is just information and discussion items, we have the treasurer's report, financial reports, and your enrollment reports. Do we have any questions or comments on those? Okay. Under board, we did add, with the ongoing relationship with the Sugar Valley Charter School, we've decided to create an ad hoc committee to just open up lines of communication even more between the 2 schools and our boards. So Bo, Jeff, and Eric have agreed to serve on that board. Jackie, did you want to add anything on that?
I just want to reiterate that this is a follow-up to the negotiations that we had with the Sugar Valley Rural Charter School Group, and some of the things that we decided to work on to build relationships and check in with them on an annual basis, so that when their 5-year charter is up for renewal, that the district will have had an opportunity to work with that group along the way to address any concerns, so there wouldn't be any surprises at the renewal time. And so I think this committee is really important in maintaining that relationship and making sure that we're upholding our end of the agreement that was done in February for this moving forward. So I'm looking forward. Again, I meet monthly with Tracy Kennedy, the CEO of the charter school, and I think it would be great to have some board members taking part in those next steps and decision. And I do believe that in March, we are expecting a full report at one of our public meetings from Tracy Kennedy and her staff with regards to the charter school.
Okay, Okay, so under policies, under H, we have 3 policies up for first reads. Health and examination and screenings, remote work, and physical examinations. Jeff, do you have any comment on those, or?
Not really, because I really haven't had a chance to review them. I think both of them are, or 2 of the 209 and 314. In looking over them, they're just dealing with health exams for employees and students. And the second one, 309, is one of the telework, remote work for employees. It sets some ground rules and policy for remote work, which, you know, as we all know, has become pretty much a thing that's pretty common anymore. So those 3 are on there for first read. And I think, like I said earlier, we'll probably be discussing them some more on Wednesday at the policy committee meeting.
Okay.
I don't know whether you have anything you want to add to that, Jackie, or not, but.
Just that if any board members have any questions or concerns about those policies, you could certainly let any of the policy committee members know. And we can address it at the committee level. They're all recommended by PSBA using their language. We didn't really make any major changes based on what was recommended to follow with school code.
So next, under section I, we have minutes from our reorganization meeting last month and also our voting meeting. Do any board members have any comments or questions on that? Okay. Under J1, are bills for payment. Any questions on that? All right.
No questions, but just a comment. In looking over, just a reminder to the board that, you know, I was looking at some of the bills or the cost of the cyber charter schools, and which is significant. I think we've spent over $100,000 each time we make those payments, and just to remind them, we need to stay on our state legislators about revising that charter school law, because I know that's kind of been put on the back burner with everything else, but that's a significant, that needs some overhaul. And I know we went on record as saying that, but just want to remind everybody that that is a high cost item for not just us, but a lot of school districts. And we need to keep the pressure on to get that law totally overhauled.
All right.
Great job, Jeff. Way to kick in and take over for Wayne.
I'm pinch hitting for him, Roger. I'm his designated hitter.
All righty.
Okay. So J3 is a termination for service agreement through the IU10. It has to do with our education services at Clinton County Correctional Facility. So we're going to end this, correct me if I'm wrong, and then we've come up with our own agreement with the Clinton County Corrections to educate our students there.
Correct.
Okay. And the next is an MOU from Bloomsburg University. Basically, again, programs, opportunities for our students to continue to take college courses through Bloomsburg for credit at reduced price.
I have a quick question, Tracy. Please, if anyone knows, I don't remember. Do we have this same MOU with Lock Haven University?
Yes, and Mansfield and many other universities, Lackawanna Community College. We continue to add these agreements with as many, to provide as many opportunities to our students as possible.
I think they're wonderful, and I'm so happy to see this one, this edition. Our students, I know this year has been off, last year was off, but do we see any increase with interest from the students?
Yep. Yes, we've been doing a lot more promotion through our curriculum nights at Bucktail as well as Central Mountain High Schools to let parents and families know that these opportunities exist, and representatives from these universities typically attend those curriculum nights. We certainly didn't get to hold our in-person, well, I guess we did because we did our curriculum night early last year. We're going to have to be very strategic about how we do our upcoming curriculum nights for the scheduling process. But I feel our counselors and our principals have done a great job promoting these things and letting students and parents know that those options exist.
That's great. Thank you very much. I look forward to this continually growing. Thank you so much.
J5 is the internship agreement between Lock Haven University and our district for any interns that they have here. Any questions or comments? Okay. And J6 is the resolution to not to exceed the tax index for this year. But like Dr. Martin said, we are working towards a 0 increase this year. That is our goal again. Okay. Under personnel, we have an updated club advisor approval. Just added a couple on there for the next year. And then several leave of absences, employments, information. All right. And athletics, their personnel agenda. One volunteer and one employment. And then the revised athletics health and safety plan that we talked about updating with the use of masks and visitors, spectators. Any questions on any of those? Okay. And section M is negotiations. We've been working very hard with the Act 93 group on their agreement, and we would like to get that approved and move on. Does anybody have anything on that? Okay. Do any other board members have anything, comments or questions?
Well, while I appreciate the work that Baker Tilly does, they certainly took a pretty good amount of our time tonight. I'd like to congratulate President Tracy Smith on successfully executing your first work session. You did a great job.
I don't know how successful that was with all the technical difficulties we've had, but I guess I can't control that. So thank you.
It all worked out.
So good. And if anybody sees my mother, I did use her mug. She bought me a mug for tonight for Christmas. So, so please tell her I did use it. All right. With that, I'll entertain a motion for adjournment.
I'll make that motion.
I'll second it.
Thank you. Board members, we do not need to have another exec session this evening. So enjoy your evening.
Okay.
Thank you, everyone.
Thank you.
Thank you.
How do I get up?